Hello, I'm Thomas Taplin. Thank you for joining me today. We're now 6 days into 2014 and already predictions are being made about the coming year and even into 2015 if you're David Cameron. A few economists tell me investors are starting to move away from China and back to the West. I've also heard that David Cameron plans to give pensioners more cash if he's re-elected next year. Either way, today we're focusing on the US economy, bond yields and of course the dollar. Well, joining me on the line from London is Adam Sanalla, Chief Wealth Manager of global financial market FX. Adam, an economist at the end of last year said that if the word of 2013 was taper, 2014's will be macro-prudential. How do you interpret this statement and do you agree with it?
Well, I just, I'd like to thank you for having me on your show. I mean, last year tapering was all about, injecting or buying all US bonds and buying the US treasuries from the Fed within the US. The 2014, the macro-prudential will be much, much tougher. I totally agree with that. I think that would lead to the economy's strength. That would lead to decrease the value of buying the bonds from the US economy. Instead of going between 85, we're looking at about $75 billion a month. That would be split up for two measures, which is buying $40 billion in mortgages, and another 35 will be buying on government bonds and securities.
Now, US bond yields continue to rise as investors ditch stocks in favour of treasuries. Do you see US 10-year bonds continuing to rise this year? And if so, just how much of a detrimental effect will this have on more fragile economies if long-term borrowing costs rise in the US?
There's always going to be a good relationship between the bonds markets and the stock markets. Now, the US and the way I look at the US government bonds, we saw a significant increase of the value of it, and it got up to between 2.9 to 30. For the short term, for the next 6 months, I would look at the bonds basically, gaining more further increase to the levels of 3.5 to 3.6. Okay. However, that scenario may occur if the Fed decides, to lower and just the tapering and decides to lower his purchase of more bonds. As we saw, there's a correlation. There's an opposite correlation between bonds and yields. So when yields goes high, bonds drop, and obviously we might see a bit of top of the yield market for the next 6 months when the Fed decide, obviously, to buy less assets and inject more cash, and obviously that would be have an impact on the economic growth because we know bonds relates to economy. Now, when it goes to the macro-prudential, this is a main element too. If the macro elements policy do happen in 2014, that means we are going to look at much tougher regulations. We'll be checking more analysis on the GDP, domestic product, and consumer spending must increase, and then obviously bonds market should react. For one simple fact, the investors would choose for more safe haven investment. They will start selling stock and buying bonds.
Okay, let's take a look at the US dollar for a moment. Many analysts see it continuing to strengthen as the year wears on. Will this help equities abroad as well as at home? And are you a bull or a bear on the dollar?
I mean, this is a tough question. I mean, it's always hard to forecast. It's always hard to forecast the 1 year ahead. But looking at the US dollars, I mean, so far we saw a significant decrease in the value of it. If we're looking at the daily charts, okay, we're looking, it got to 136. This is an acceptable, movement. The trend, I would still look at it as a more high. I would still, to sell the US dollars for the next 6 months at least. I'll buy more euros, and I would look at more technical levels that might get to 1.35. From that level, I'd still buy even more. And obviously, as we know, it will have a massive, massive impact on long-term commodities such as gold and silver, and obviously some oil as well.
Finally, Adam, we should mention the incoming chair of the Federal Reserve, Janet Yellen. She's taking over from Ben Bernanke this month. Are you anticipating a heavily dovish approach in her new role?
got no doubts that Miss Yellen would do a great job. She should get the approval of the Feds by the end of this month, by end of January. She will take over as a Fed chairman. However, the way I look at Miss Yellen's policy towards the tapering, and she will continue, on the steps of Mr. Bernanke. She will decrease the tapering. She a bit more conservative way than Mr. Bernanke himself. And I believe, by the 2014, if she does pull all the checks right and she does focus on the macroeconomic themselves, we might look at, and obviously the elimination of the QE in 2014. We're looking at obviously the interest rates such as crucial factor to her. If that remains for the interest rate policy on the 0.25, and she has to concentrate on the continuing of the unemployment, which is 2%, and the inflation has to be below 1.8%. I think she would do a fantastic job within the year 2014, and that might lead to the increase of the interest rates by the middle of 2015.
Okay, thanks for joining me today. Don't forget to click back and check out all our other interviews, market updates, and if you're in a restless mood, cartoons and horoscopes. I'll see you again tomorrow, but for now, goodbye.